5 minutes to the gentleman from Ohio, Mr. Jordan.
Thank you, Mr. Chairman. We have said many times, I said in my opening statement, this thing is a mess. Mr. Borofsky indicated in his opening comments that it's tough to even have to figure out what the exact goal is. I mean, I learned a long time ago, you can't get anywhere if you don't know where you're going. You got to have a defined goal you're trying to achieve. We've had changing metrics. We've had, the promise or the hope of 4 million, potentially 4 million people getting their mortgage modified, and yet 170,000 there. And then, of course, the redefault problem that's already been talked about. For those who actually get permanent, 40% of them are likely to redefault. So a total mess. But I actually want to go to Mr. Calabria. Am I saying it right? I've heard several, Calabria, okay. Heard several fronts. You said, I think, great, it's tough to pay a mortgage if you don't have a job. I mean, that's what this in large part boils down to. So we can continue to have this big government-oriented approach, big spending, big regulation to our economic concerns out there, or frankly, in my humble opinion, we can get back to creating a framework and an environment that actually is conducive to economic growth, actually fosters job creation in the private sector, and I would argue doesn't create policies that don't create uncertainty out there for the small business owner and the people who actually create jobs. So my question is a general one to you. What is Congress doing right in fostering a framework and a context for economic growth and job creation to take place in the private sector? What, in fact, is Congress? I think that we got a lot of things we're doing wrong. But general question on what we can do to get to the heart of this, because again, until you have a job, it's tough to make a mortgage payment.
And I would agree, and I would emphasize, and I would say as well, to touch on the last question, we've certainly seen during this recession that African Americans have been hit harder in terms of the labor market than anybody else. And certainly this is part of the reason that this explains why the denial rates are different, because quite frankly, the HAMP program does not really help you if you've lost your job. And it does not deal with that as an issue. So I think this needs to be rethought in that regard. I would say as a broad measure, private sector needs to have some certainty to be able to plan. So despite whatever one might think about any set of rules or legislation, you need to have a set of rules so that the private sector can plan around them. And I think many businessmen would probably tell you that even a bad set of rules that they know that they can plan with is better than rules that change, off and on. So, my own perspective. So, whatever one thinks about the recently passed health care, at least it's done. Yeah. And that's something that the private sector can move forward with and plan around. I do think we need to get our situation in terms of, our fiscal situation in order. Any small businessman today has to factor higher taxes into his future plans. Yeah. And that's something that I think we need a credible path going forward on. I think we also need to find ways to get banks to lend again in a serious way. And this is, I think, one of the perverse implications of where monetary policy and fiscal policy have worked against us. Normally, very low record interest rates help create businesses, but in this environment, banks are essentially able to borrow at nothing, put it in treasury bills for 3.5%. That's a very large interest rate margin for a bank, risk-free. If they're doing that, they have no incentive to go out and lend to the private sector because they can really just make great risk-free returns right now. Part of that is they're trying to make these returns to cover up the losses they have on their balance sheets. Right. I think we need to be more aggressive in terms of the bank regulators in making banks actually recognize losses on their balance sheets. We've got at least probably $500 billion and probably second lien loans that aren't recognized.
Do you think we'd be better off simply not having the program? You think the false hope this program gives to some homeowners, the problems we've seen, the lack of transparency, the lack of a clearly defined goal, everything we've seen over the last year, you think we'd be better off simply letting the market work and letting, as the ranking member pointed out in his opening statement, letting banks work with their the homeowner, the servicer work with the homeowner, or the bank, the lending institutes work with the homeowner, and work it out amongst themselves versus the heavy-handed government coming in?
Well, I would say as an overall, a short answer of that is, given how few people have actually been helped relative to the universe of it, I think it's probably done more harm than good. And that you have encouraged people to, for instance, a lot of what I hear is sometimes people were encouraged to, in order to get to the front of the line, stop paying your mortgage. Well, that's going to ding your credit. So I think some of this, you're really encouraging probably more harm than good. I will lay out, my bias and my perspective is that I think taking
Mr.
our
Taylor's
adjustment in
dying
the
to jump in
housing
here, but
market.
I did want to, well, we'll go to Mr. Taylor.
I will yield the gentleman an additional minute.
You're,
Oh, God
you're
bless you,
throwing
Mr.
the
Chair.
baby out with the bathwater here. I mean, look, to say that it's done more harm than good is just ludicrous. It simply
John, I
hasn't.
disagree with that.
It simply hasn't been effective. And also to start from the premise that well, the problem is unemployment and lack of equity, as he puts it. That's why we're having these foreclosures. It's kind of like saying, well, the house is gone. Why is the house gone? Well, it burnt down. And then stopping with that level of thinking. Why did it burn down? We have unemployment and lack of equity because of a massive foreclosure, malfeasant lending practices that put people in unsustainable mortgages. And to reverse that, we've got to address that. First, clean it up, but also understand that
Well, you raised a
8
question.
million American families are not wrong, Congressman.
Yeah.
8 million American families didn't set out to put themselves in a malfeasant loan
I'm
or an
not saying they
unsustainable
did. I'm
loan.
just
Well, it
saying-
certainly sounds like you're saying that.
I'm not saying that at all. I'm just saying that a program that lacks the accountability that this one does and extends false hope to the very people we're trying to help is a program that has serious flaws and failures. And when
So
we want to
make the
correct.
program
I want to do one last question if I can in my last minute, my extra minute. Thank you, Mr. Chairman. To the Inspector General. Why do you think Treasury is reluctant to, one of the suggestions you had in your report, and I asked this, I think, to Mr. Allison in the last hearing we had, reluctant to look at the underlying loan to determine if some of the fraudulent things were there in the original loan? Why is Treasury reluctant to implement that suggestion you had in your last report?
As they've explained it to me, is that it's sort of akin to a resource issue from their perspective. They believe that tracking the original loan, this is the explanation that they provided, that getting the original loan file and the original loan application would be very resource intensive. As you know, these mortgages were sold and resold and resold and resold, and therefore they claim that it would be very difficult to obtain the original mortgage file.
Thank you. Gentleman's
Appreciate
time
you.
is